So, good evening, everyone. And first of all, I would like to thank Team Taxo for giving me this opportunity to deliver this lecture on the topic of TDS and TCS under GST. Participants, we will discuss about the all aspects related to TDS and TCS under GST. See, this is one of the important aspect that brought in under the GST regime, which we need to understand because it is just impacting a specific segment of the taxpayers. So that's why it's not a kind of aspect which is being used by each and every taxpayer. So certain specified taxpayers are subject to the applicability of these provisions of TDS and TCS under GST. So one by one we will discuss. First we will take up the topic of TDS and then we will proceed to TCS. So let's start with the topic of TDS. I will try to address all your concern, whichever I can address at this platform. So just starting with the concept of TDS. TDS, whenever we heard the topic of TDS, it comes to our mind like the provisions that are applicable in income tax. So more or less, I must say that more or less the concept is very much similar that what we usually see in the income tax regime. So in this case, what happens like TDS in itself defines like tax deducted at source. What does it mean? When the tax is deducted at the source point. So that is what we call TDS, tax deducted at source. Like at the place of origin, TDS is deducted. For example, if I am supposed to pay tax, but I am receiving some money from some other person, so that is my income. If I am collecting some amount from a person, third person, so that will be my income. But on that income, I am supposed to pay tax, like be it income tax or be it GST. In case of income tax, if it is my income, then I have to pay income tax. If I am supplying something to another person, then I will collect consideration. On that consideration, I will collect GST. For GST, I have to collect GST and then I will remit it to the government. So what happens in this case, like TDS, before collecting the tax from that recipient will deduct my tax at their level and directly deposit to the government. And in turn, I will get the benefit of the tax deposit by the recipient. Similar, the provisions are very much similar to the TDS concept in the income tax. So similarly, we will discuss like in case of GST, like I am a supplier of goods or services. If I am supplying any goods or services to a person like A, let's take an example of A. For example, I am supplying services of rupees 100 and charging tax of 18 rupees, 100 plus 18, 118. I am sending invoice of 118. So what will happen? The recipient, while making the payment to me or crediting my payable in their books of account at that point in time, what the recipient will do? Recipient will deduct the amount of TDS prescribed in the act, whatever the rate I will discuss later on, and retain that amount with him. And at the time of filing of their returns, they will remit that amount directly to the government, and that particular amount will reflect on my portal. I will have to accept it, and that amount will reflect in my portal, and I will accept it, and the amount of tax deposited by the recipient will automatically credit in my cash ledger. So that's the process that I will get the benefits of tax deducted by the recipient. The basic idea behind this particular bringing the provision of TDS just to curb the tax evasion. Like there are certain transactions that there may be a case where the recipient is not supposed to take the registration. In that scenario, if I am a supplier, I can easily hide that transaction without just showing in my return, because the recipient is not registered. He will not show that particular transaction in any of its return. In that scenario, I can hide my output or output transaction and very easily evade the tax. So just to curtail such kind of transaction, that this provision of TDS was brought under the provisions of GST. So section 51, uh, governs the provisions of TDS under the GST 21, section 21 of UT GST, and section 20 of the IGST Act. Earlier, at the time of inception of GST, since there were so many glitches at the time of inception of GST, so at that point it was not possible for the government to implement the provisions of GST TDS. So later on, they suspended the applicability of the TDS provisions. I will also discuss about the TDS provisions, and later on, when the situations came under the control of the government, they introduced in the 21st council meeting, they introduced and decided the date, that is 1st of October 2019. From that date, TDS provisions were made effective. So we will discuss about the section 51, who is supposed to pay or deduct TDS. So there are certain there the person who are supposed to deduct TDS are defined already in the section 51. I will discuss one by one. Like there are certain you can see on the screen, department or establishments of central government or state government, local authorities, government agencies, notified persons. I will talk one by one. Like department, as I said, many of the departments of the government are not supposed to take registration under GST because they are not supposed to pay GST on their supplies. So in that scenario, what the government has done, like bringing them into the ambit of TDS. So now, even if the government department is not supposed to take GST registration for regular supplies, it has to take registration under to comply with the provisions of TDS. For example, I am a supplier, I'm a works contract service provider, and there is a department like Ministry of Corporate. I'm taking the example Ministry of Corporate. You can see on the screen. Ministry of Corporate invited me through a tender just to construct a building for their office. So I will participate in the tender, and I will define a certain fees for that service. So in that scenario, when I'm raising an invoice to the Ministry of Corporate Affairs, in that scenario, Ministry of Corporate Affairs, while making the payment or making me creditable in their books of account, they will deduct the tax on that service, and they will file their return, they will show it in their return, they will deposit accordingly. The same will be reflect in my GST portal. So department establishment, I have mentioned some examples like Ministry of Corporate Affairs, Ministry of Defense. They are supposed to take TDS registration to comply with the TDS provisions. Similarly, local authority, I have mentioned here some authority like Delhi Development Authority, a number of authorities like village panchayat. These kind of authorities are supposed to take registration while taking supplies from the service provider or the goods supplier. Government agencies, there are certain government agencies. There is a minor difference in all these establishment like government. We normally get confused about what is government agency, what is local authority. It all depends on the situation, on the facts. You have to check it very closely when you are getting such kind of transactions. You have to check whether TDS provisions are applicable. So you have to check all these very closely, like what is defined as local authority, what is department or establishment, central government or state government, like government. So I have mentioned, just for the sake of understanding, I have mentioned some examples like Niti Aayog. It's a government agency. They are just acting as a administrative agencies. They are not actually government, but government appoints them or constitute them as a administrative. They look after everything, all the administrative work. So I mentioned Niti Aayog, Indian Council for Agriculture, like notified persons. Apart from all these three, governing bodies, there are certain other authorities defined, by notification 33 by 2017. In this particular notification, they mentioned like authority, any board or any other body set up by an act of parliament or state legislature. Maybe if it is set up by a central government, they will go for parliament. If it is set up by the state government, they will go for state legislature, or established by government, simply government. So there are certain, authorities or board, you can say, I mentioned in National Law Commission, National Commission for Minorities. They are all categorized authorities or board or bodies, governed by the state or central level. Societies I mentioned is like Central Wool Development Board. There are certain authorities, societies, for the welfare of a particular industry, like textile industry, registered in Rajasthan Central Wool Development Board. It is wholly governed by this society is wholly governed by the Ministry of Textiles. So there are certain societies which is regulated by the government. You have to check it closely at the time of checking the transaction, whether TDS is applicable. You have to close it closely, check it closely. So PSUs, you are very much like there are a number of PSU rights, PTC, PFC, number of PSU where there is stake of the central government, like 51% stake is there in all the PSUs. So there are certain persons notified by the government who are supposed to take the TDS registration and accordingly has to comply with all the provisions mentioned under Section 51 and allied provisions. So now the question comes like how I will identify whether I am supposed to deduct TDS or not. Like I am a government department, I am Ministry of Defense. Now how I will come to know whether a particular transaction is subject to levy, subject to deduction of TDS or not. So simply Section 51 clearly states that yes, if a particular contract exceeds the value of 2,50,000, see, just try to understand. I will create a simple theme where you can understand. Forget everything. Just understand the basic principle of whether transaction is subject to levy of TDS or not, or on a particular transaction. Just try to understand. What you have to understand, just focus on the value of contract, value of taxable supply. I'm focusing on taxable supply. Value exceeds 2,50,000. Means if there is any transaction, I am a ministry and A is a supplier. So if I have to check the transaction, what is my main focus? Whether the supply is taxable or not. If it is there, then it means I am supposed to deduct TDS. Now, second is what is the value? If it is exceeding 2,50,000, means now I'm sure that I have to deduct TDS. Apart from that, if there is any other transaction, there will be no implication of TDS. So this is the main basic principle you have to focus at while checking any transaction. Taxable supply and value exceeds 2,50,000. For example, I'm just taking example. I'm Ministry of Defense. I have given a contract to A for just like supplying stationery item, having value of 2,70,000 without GST. So it means it is clear stationery items are not exempted; they are taxable. Value I mentioned 2,70,000. It means both the conditions are fulfilled over here. It means while making the payment to A, or while making a creditor in my books of accounts, I will retain the amount of TDS and will show in the return for the respective month. For example, if I am deducting the TDS or I'm just making him credit in the month of November, then I have to file it in the return of TDS for the month of November. So what I said, like taxable supply, you have to remember taxable supply. Second is value must exceed 2,50,000 without tax. Like I mentioned over here, value of supply shall not include tax component. Value of supply shall not include tax component. For example, why I'm saying tax component? For example, I have taken an example of 2,60,000. I have to pay to A 2,60,000 inclusive of tax. In this case, what happens? For example, tax rate is 18%. So I have to do the reverse calculation. And after excluding, let's say if it comes out 2,40,000 and 20,000 is tax. So the value is less than 2,50,000. It means the contract value is less than 2,50,000. I'm not supposed to deduct TDS on that transaction. Again, I'm focusing single contract value must exceed 2,50,000 and value should be a taxable supply. If I am having multiple contracts with A, multiple for different supplies, I have to again, for each contract with the A, I have to check whether value exceeding 2,50,000 or not. That's a simple concept. If you are stick to this concept, I think rest of the things you can understand very easily. So moving ahead. Threshold limit will not include exempted supplies. For example, I have a contract for stationery items in which it comprises books as well. For example, a stationery item 2,30,000 and books amounting to 50,000. So total amount, total value comes to 50 and 230, like 280. So in this case, 50,000 for books are exempted. There is no tax. 2,30,000 is taxable for a stationery item. Again, I have to check. Since I have already made taxable supply. So taxable supply is there under a contract for 2,30,000. It means no implication of TDS. So I think this is pretty clear to all of you. Like what we have to make it clear. What we have to remember, like taxable supply, single contract, value must exceed 2,50,000. That's the thing. And I must be the recipient should be the person, like what I have defined here. Apart from that, there will be no implication of TDS. Like I'm person, registered person who does not fall under this any of this category. So I'm not supposed to do TDS. Exemptions. For exemptions, like I already told you, like there are certain transactions wherein there will be no implication of TDS. Like rightly I said, 2 lakh. If the contract value is less than 2,50,000, no TDS. Goods and supplies are exempted from GST, no TDS. Where the location of the supplier and place of supply is different from the location of the recipient. This is the important point. I think this is important as well as a little bit confusing. There is a concept, there is a logic behind this particular entry, and I will discuss with in my next slide with some examples. Coming to the next, where the payment is made for the invoice issued before 1st of October 2018. This is basically a transitional provision, you can say, where transaction is taking place before the effective date of the TDS provisions. So in that scenario, what will happen? Like it is already clarified by the SOP released by the CBIC, wherein they have clearly mentioned, like if the amount for a particular transaction received before the effective date of TDS provisions. In that scenario, for example, I have received payment of 10 lakh rupees before 1st of October 2018, and invoice is being raised by after effective date of let's say 10th of October 2018. Then I'm not supposed to take TDS on it. Similarly, I've already raised invoice earlier before 1st of October 2018. In that scenario, payment, I'm just making payment after effective date, 1st of October 2018. Even in that scenario, I'm not supposed to deduct TDS. The theme is like if any of the event that has taken place before the effective date means I'm not supposed to deduct TDS. Be it I have already account for the supplier's invoice or I have made payment to the supplier in any of the event. Where the payment is made to unregistered supplier, this is again a point of understanding, like payment to unregistered supplier. Section 51 says taxable supplies value 2,50,000 under a contract. It doesn't say like the supplier is registered or unregistered. But again, SOP issued by the department says that like if I'm taking supplies from the unregistered supplier, then I'm not supposed to deduct TDS even if the value exceeds 2,50,000. The basic reasoning I understand, like if I'm deducting TDS, since he or she is the unregistered supplier, then he cannot take the credit of that particular amount of TDS. It's a total loss to that supplier. So the idea is clear. Then why unregistered supplier supplies made by unregistered supplier are not subject to levy of or deduction of TDS. PSUs to PSU. Like earlier, initially there was no such kind of exemption available to PSUs to PSU. Later on, 5th of October, by virtue of notification 31/2018, they exempted the transaction between the PSUs because because both are TDS, both are deducting TDS. So just giving the benefit to these PSUs, they have introduced this particular provision. Similarly, TDS registered person to another TDS registered person, where payment, again same thing is there, where payment relates to cess payment. If my supplies are subject to collection of cess payment, in that scenario, TDS will not be deducted. So these are the basic transactions you can understand. Authorities under ministry, it is a specific advantage given to the Ministry of Defense by notification 57/2017. So these are specific. I think there is nothing technical in this. This the some advantage that is given by the government to the specified recipient of the services or the supplies. So just moving ahead, I will discuss. I skip this particular where location of the supplier and place of supply is different to location of service recipient. I will discuss the idea behind this. Like again, I'm again reading this point where location of the supplier and the place of supply is different from the location of the recipient. Recipient location, in case, like for example, government of West Bengal purchases taxable goods from a local supplier. In this case, supplier placed in Kolkata, like West Bengal, place of supply, since goods are supplied within the state of West Bengal, in that scenario, place of supply will be Kolkata. State or registration of the recipient, government of West Bengal, again the recipient state is West Bengal. In this case, the transaction will be intra-state. Since all the persons involved in this transaction lies in the state of West Bengal, so the transaction will be intra-state. So what will happen while making the payment to the supplier? TDS will be deducted in proportion to CGST and SGST. Since this is the intra-state transaction, so CGST will be deducted at the prescribed rate, like 1%. SGST will be deducted like 1% and will be shown in the respective returns. Again, coming to the point, location of the supplier, Delhi. Place of supply, Punjab, because supply is being made by the supplier to the government of Punjab. State of registration of the recipient, again Punjab. In this case, supplier is locating in Delhi, place of supply is in Punjab, recipient location is Punjab. It means it's an interstate transaction. Again, IGST will be deducted at the rate of 2% and will be shown in the return. Now, third point is coming, which I can relate to that particular line I wrote earlier. Government of West Bengal engages a contractor of Delhi for renovation of Bangla Bhavan in Delhi. So in this case, since the service relates to the some building or construction, so the place of supply is the location of the building. Like, so again here, place of supply is Delhi. Supplier is in Delhi. State of registration is West Bengal. So in this case, the location of the supplier and place of supply is different from the location of the recipient. So in this case, there will be although it's an intra-state transaction, but there will be no TDS implication. Why is it so? Because you can relate this thing like in first two transactions, the tax will be retained by the state of the recipient. Ultimately, if it is charging CGST, again the tax will be retained by the state government of Bengal. In second scenario, again, since Delhi supplier will charge IGST and by virtue of place of reason, the tax will reach to the state of the recipient, like Punjab. So you are just try to understand. But in case of third transaction, the tax is retained by the state of supplier. ultimately, because CGST and SGST are. So if the tax is retained by the state of supplier, then in that case, being CGST or SGST being charged by the supplier, so recipient cannot deduct CGST or SGST. Why so? Because CGST and the SGST if deducted by the recipient, then it will retain with the state of Bengal. So that cannot be remitted to the state of Delhi. So that's the basic theme, that in case location of the supplier and the place of supply is different from the location of the recipient, in that case, there will be no implication of TDS. So no TDS will be deducted. So I believe I have clarified most of the things about the TDS. So important aspect, I'm just reiterating again, like taxable supplies, you have to remember taxable supply. Whenever you come across to any of the transaction where you have to identify whether TDS provisions are applicable or not, what you will check first instance, whether the supply is taxable or not. Second, it is under a contract where the value exceeds 2,50,000. If the condition is satisfied, then you can go outrightly for the deduction of TDS. If the condition is not satisfied, then again check if there is any other implication where I can say, yes, TDS is applicable. So again, I've mentioned some, illustrations where we can discuss multiple scenarios. Like finance department is making a payment of 3 lakhs to the supplier of printing and stationery. Again, printing and stationery is taxable. Value is 3 lakh. So first thing is taxable supply. Second thing is contract is for 3 lakh. Value exceeding 2 lakh. Means outrightly TDS is deductible on this particular transaction. Education department is making payment of, I am coming to the second point. Education department is making payment of rupees 5 lakh to the supplier of printed books and printed or illustrated postcard, where payment for books is for 2 lakhs and 3 lakh is for other printed and illustrated postcard. Again, there is a breakup of 2 lakh and 3 lakhs. Now, when I'm talking about the books, it is 2 lakhs, and I'm talking about the other printed material, which is taxable, again 3 lakh. So again, the total value of the contract is 5 lakh rupees. But for the taxable, we will have to check the value of taxable price. Yes, it is 3 lakhs in this case. It is 3 lakhs in this case. We can ignore 2 lakhs because 2 lakh is the exempted value. So again, here 3 lakh is exceeding from the value of 2,50,000. Again, in this case scenario, also TDS will be deducted by the education department while making payment to the supplier. Coming to the third illustration, finance department is making payment of rupees 1 lakh to the supplier of car rental service. Again, value in this case is 1.5 lakhs. Again, it is not exceeding, although car rental service is taxable. First condition satisfied. Contract is there. Third thing, value is not exceeding 1.5 lakhs. It means there is no requirement of deduction of TDS by the finance department. Coming to the next case scenario. Health department executed a contract with a local supplier to supply medical grade of oxygen of 2.6 lakh, including GST, and making full payment. Again, as I said earlier, like here the contract is for taxable supplies, but the value is 2.6 lakh inclusive of GST. So what we are supposed to do in this case, while checking whether TDS provisions are applicable or not, we will just eliminate the component of GST by doing the reverse calculation. And by doing that, we got this value of 2,32,000 rupees, which is again less than 2.5 lakhs. So again, there is no requirement of deduction of TDS. Coming to the next point, Municipal Corporation of Kolkata purchases a heavy generator from a supplier in Delhi. Now it is making payment of 5 lakhs and IGST 8% of 5 lakhs for such purchase. Again, 5 lakh, it's the same thing. 5 lakh taxable supply is there, contract is there, value exceeding 2.5 lakhs. Therefore, TDS will be deducted. But again, here, since IGST is applicable, so IGST component of TDS will be IGST only, not CGST and SGST. So while deducting the TDS, we have to check this particular aspect also, whether it is intra-state transaction or intrastate transaction. Coming to the next point, municipality is making payment rupees 5 lakh to a supplier in respect of cleaning of drains where the value of supply of goods is not more than 25% of the value of composite supply. So here we will have to check whether cleaning service of drains, whether it is taxable or not. If it is exempted by virtue of any entry in the notification, like 12 by 200 is notification for the exempted services. So in this case, since entry is exempted by notification number 12 by 2017, therefore there is no implication. Goods, although goods are taxable, but 25% value. It means it will come out 1,25,000 rupees. So in that scenario also, again, the value is less than 2.5 lakhs. So in that scenario, no TDS will be deducted by the municipality. So this is, if I sum up the entire, the concept of TDS. So there is only one thing that you have to remember at all the time is contract value, taxable supply. I'm just again saying the same thing again and again because this is the important thing. If you stick to this particular aspect, I'm 100% sure you will never skip to check whether TDS is applicable or not. Taxable supplies, single contract with a supplier and value exceeding 2.5 lakh. This is the only thing you have to remember at all stages. So there are certain procedural things: TDS registration, requirement, and payment. TDS registration, since by virtue of section 24, which says that there are certain category of taxpayers who are supposed to take registration mandatorily. So there is no escape that they can skip the registration. So in that category, there is a taxpayer who are supposed to deduct TDS. If they are supposed to deduct TDS, for example, I am taking a supply from a person supplying the exempted goods all the time. On that particular transaction, I am not supposed to deduct TDS. If I am not supposed to deduct TDS, I am not supposed to take TDS registration. But if I am supposed to deduct TDS under section 51, in that scenario, if my transaction, if on my transaction provisions of TDS are applicable, in that scenario, I am supposed to take mandatory registration of TDS. TDS registration is required to be taken. For example, let's take an example. If some of the government department who are supplying services or goods are supposed to take regular taxpayer registration, even in that scenario, if my transaction, if the supplies I'm taking from a person are subject to deduction of TDS, I have to apply for a separate TDS registration in that scenario. So in that scenario, though in that scenario, I will be having two different GST registration. One is a regular taxpayer, and second one is a TDS deductor. Again, deduction. We have discussed a lot about the deduction. Deduction will be done 1% of SGST, 1% of CGST, and 2% of IGST if the contract value exceeding 2,50,000. So what will happen if I am deducting TDS? I have to keep it in my pocket? No, I have to comply with the provisions of GST and I have to deposit to the government exchequer so that the supplier can take the benefit of that particular TDS amount. If I am not filing my return, if I am not depositing the TDS within time frame, within the prescribed time, then the supplier will not be able to take the benefit of that TDS amount, and there will be some adverse consequence that I have to face as a TDS registered person. So TDS deduction, if I'm talking about the TDS, when you have to deduct the TDS, as I said earlier, there will be two scenarios. If I'm making a payment, like if I'm making an advance payment, or if I'm not making a payment, but booking the invoice in my books of accounts, like I'm creating my liability to pay to the supplier. So at any point of time, be it making the payment or be crediting in my books of account, at that particular point, I have to deduct TDS, irrespective of the fact that whether the payment to the supplier has been made or not. So this is important that you have to take care, like payment or credit. TDS shall be deducted. Whatever the amount I have deducted, I cannot keep in my pocket. I have to deduct and deposit to the government exchequer by 10th of the following month in which TDS is deducted. For example, the transaction took place in the month of November. I have booked it in my books of account on 30th of November. Then I am supposed to pay it to the government exchequer by 10th of the following month, like 10th of December, by all means. If I am not depositing the same, I am not filing it in my return, then the supplier will not be able to take the registration. So just take care of this thing. This is the time bound, activities you have to follow. Moving ahead, TDS returns and certificate. Again, similarly, if you are aware about the TDS provision under income tax, I believe most of you are aware about all these provisions of TDS under income tax. If I am deducting TDS, then I have to provide some kind of certificate to the recipient, to the supplier, so that just giving them a proof like we have already deducted and deposited. Like income tax, they are getting the benefit after end of year. In GST, they are getting the benefit on monthly basis. So there seems no such kind of it's a mandatory requirement to issue a certificate. That's why they have eliminated this particular provision of issuing certificate like in Form 7A. So they brought it like just filing return is sufficient. Just depositing and filing of return sufficient to pass on the credit to the supplier. So just discussing about briefly just discussing about the returns and certificate. Every person deducting the TDS on the supplies made by a supplier has to file return in the form GSTR 7 on the GST portal. Again, like all other returns like 3B, GSTR 1, GSTR 4, they can file it by offline utility or by just putting the details on the portal directly. So again, as I said, like by 10th of the following month, they can deposit the TDS and at the same time they can deposit, they can submit the return so that the credit can be. There are certain queries I think I can see here, but I will take up the queries at the end. We will discuss one by one. So TDS certificate, again, like I'm filing return on 10th of the following month. So after immediately filing within 5 days, I have to issue a certificate in the form GSTR 7A. But there seems no such kind of requirement because it is an automatic process, like putting the details on the deduction and payment on the portal by 10th of November. It is automatically reflecting in the supplier's portal. Supplier has to just do a simple thing that they have to go to on their portal and they have to accept the transaction, whether the transaction pertains to them or not. In case if the transaction okay, they can accept it. They can automatically the amount of the TDS will get reflected in their cash ledger. So that's why with effect from 1st of January 2020, certificate requirement was dispensed with. There is no as such requirement in the form like again they have said like issuing the forms in the prescribed form. Again the same thing is there. So there is no such kind of requirement now. Just issuing certificate like in Form 7A. Moving ahead, TDS consequences. Again, if there is a provision in the Act, so you have to comply it. If you are not compliant, then you have to pay. Nothing comes for free. If you are doing something, if you are violating a particular provision, you have to pay it to the government. Like in case there are certain scenarios I have mentioned over here, like TDS not deducted or short paid. If you are not deducting TDS or if you are deducting short paid, then you have to pay the amount of TDS. If you have not deducted, you have to pay the entire amount. If you have short paid, then you have to pay the difference along with the interest at the rate of again 18%. And also there is a penalty that can be levied that is amounting to 10,000 or the amount of TDS, whichever is higher. So if you are violating the concept of TDS, like if you are not deducting like 25,000 in a month, then you may have to pay 25,000 rupees. So there are no harsh provisions that you have to take care that there is no such kind of violation. Fail to furnish TDS return. Again, it's a heavy provision like 100 rupees per day, up to a maximum limit of 5,000. So for a return, the maximum penalty that can be levied like 10,000 rupees for a particular month. So if you are deducting TDS, then that make sure that all the returns are duly filed within the time frame. Otherwise, 10 rupees, 100 rupees per day. Now it is reduced to 25 rupees per day up to a maximum capping of 1,000 rupees, June 21 onwards. So although amount is now less again, so that's not the excuse. Just it's very nominal amount, then you can skip from the, but the loss, you just think from the perspective of the supplier, they are not going to get the benefit, and if there is such kind of non-compliance, maybe supplier won't be willing to work or to provide supplies to you. TDS deducted but not paid within it's a serious violation. TDS paid, deducted, it kept in your pocket, but not paid to the government. So again, it's a serious violation. Again, the same kind of penalty is there. Same kind of penalty is there. TDS certificate not issued 100 rupees per day, maximum 5,000 rupees. But again, from 1st of January, there is no such kind of means there is no such kind of late fees on the issuance of TDS certificate. Yes, there is one more thing I think I must tell you. Like if there is some kind of provisions lapse in the provision and any inquiries initiated by the department, then they can levy some more penalty, like maybe exceed to 25,000 rupees. Apart, like I have mentioned it, 10,000, they can levy 25,000 also. So this is all what I must say. This is what I can summarize TDS. Again, I'm just taking a little bit of time, like summarizing it. Taxable supplies, just make sure taxable supplies, single contract, and the value should exceed 25,000. If you can remember these three aspects, then you can identify any of the transaction, whether subject to TDS or not. So that's the whole thing about the TDS. Now, just moving towards TCS. So I think if there is any question about the TDS, let me take all these questions. Like TDS deducted on single rate or different rate. TDS deducted of single rate or different rate. So can you just clarify, Mitulji? Shubham, is TDS on GST dedicated government or dedicated by deducted by government or on for every TDS? I think is TDS on deducted. I think Shubham, I think I have already clarified this. Just make sure three things: taxable supplies, value should exceed 2,50,000, single contract. And the deductor is the category of person which I have shown you on the first slide. So only these persons are subject to, supposed to deduct TDS. Apart from this, like I'm a private supplier, I'm a private, person taking service from any third person, I'm not supposed to deduct. It is not applicable like, income tax, that everyone has to deduct TDS. How to days GST refund time limit? I think this is not, this is something refund. What will the state of TD in case a government university calls a musician to perform and pay rupees 3 lakh TDS in case of government university calls? What will the state of TDS in case of government university? Somebody has raised this question. TDS in case of a government university calls a musician to perform and pay. See, again, I said if government university you have mentioned, I believe this will come under the notified category of person. Then in that case, it is qualified. It has to deduct TDS. Now the musician, if the musician is a performing and if it is subject to levy of GST, maybe some kind of artistic performance are exempted. Like, but if this musician is subject to levy of GST, the services provided by this musician subject to levy of GST, and the value is exceeding 3 lakh, I must say that it is subject to levy of GST, TDS. Do bank need to deduct TDS on rent paid against office hired? Bank need to deduct. See, bank, if it is a government bank, you have to check whether it is coming under the category of specified person I mentioned in the first slide. Then again, the answer is same, that here bank has to deduct TDS. So railway contract less than 2, also railway take 2%. Is it wrong? See again, railway contract is there for less than 2.5 railway deduct TDS. You can challenge this thing why they have deducted. Sometimes they do it as a matter of just maintaining the theme they have adopted in the organization, that deduct the TDS on every contract, irrespective. They are not looking after the value of contract. So you can challenge it again. Again, you can talk to the railway persons then why they are deducting TDS. So as I said, there are three things you have to take care. Railway government, yes, government organization, government entity, value of supply, taxable supply is there, subject to levy of TDS. Value is less than 2, then there will be no TDS. So you can talk to them. You can challenge this particular policy they have adopted. So coming to TCS, TCS again, something that I can relate to TDS provisions. The very concept of TCS is similar to TDS. It is just to curtail the evasion of tax, like just tracing the transaction where there are suppliers from the unorganized sector, or from or the unorganized sector, you can say, where they are not paying tax or they are not taking registration. That's why government brought this concept of TCS. Although TCS provisions are applicable to the e-commerce operator, like if I am in case of like I'm supplying any goods or services to the e-commerce platform, in that case that e-commerce operator is supposed to collect TCS on that transaction. Just try to understand, like e-commerce operator, if I'm selling something from the e-commerce portal, then the supplier cannot be easily traced. You cannot trace a supplier. Somebody is coming from a place and just got enrolled himself on the e-commerce portal, and irrespective of the transactions he is doing, like if he is exceeding that threshold limit of registration, like 20 lakhs or 40 lakhs, no one can trace the transactions. He's simply coming on the e-commerce portal and just selling the goods or services on that portal, but no one can trace that particular supplier. So just to just creating a trail of such transaction, this TCS provision was brought into the GST. So just discussing about the section 52 again, like 51 and for TDS, 52 for TCS. Again, just facing the initial glitches of the GST portal, the provisions were suspended for a certain period of time. Again, with the effectiveness of this TDS provision, they brought it on from 1st of October 2018 by virtue of notification 51, 52, okay, 51, yes, by virtue of notification 51. So discussing about the e-commerce platform. So e-commerce, there are certain confusion about the e-commerce portal or e-commerce operator. So just discussing about all these e-commerce operator, like taking example of Flipkart. Flipkart is a e-commerce platform. They are doing business through e-commerce. E-commerce, you can say something being sold over the digital platform. It's a electronic commerce. The word in itself defines electronic. It means e-platform. Commerce means business, you can say in layman's sense. So something is being sold or purchased over the electronic portal. So that is called e-commerce. E-commerce operator, somebody who is managing, who is owning the that particular portal, is e-commerce operator. Means there is a platform like Flipkart. Flipkart is owning a particular platform wherein Flipkart is providing a place, you can say support, where I can sell, anybody can sell or market its product, where the buyer can place their order and supplier can easily supply to them. And e-commerce operator is playing a vital role in that particular transaction. So whenever I am selling anything from the electronic commerce portal, that will be subject to levy of TCS. Exceptions are there. What are the exceptions? Like Again, one more thing I would like to clarify. E-commerce operator. E-commerce operator, like I am a owner of particular, for example, I am the owner of a e-commerce. I am selling some toys, kids toys. So what I did, I just created a portal and selling those products over that portal. Nobody else is allowed to place their product on that particular platform. So this is not electronic commerce operator. You can say this is electronic commerce operator, but these kind of transactions are not subject to TCS. TCS is applicable on those transactions where there is a platform and third person is coming on that particular platform, ordering their products, and some buyer is coming on that platform and placing the order. So in that scenario, like Flipkart is doing, Amazon is doing, other Misho, there are number of portals you can see nowadays. So what they're doing, they are just providing a platform. They are not trading there, they are not selling their own product. They are just providing a platform. So that's the important thing you need to understand. There I have seen number of person get confused. What is, like I am selling some goods from my shop. Then I created a web portal. Now I have placed my all my goods on that portal. Now I will be called as an electronic commerce, or I am supposed to deduct TDS. So in that scenario, there is no such kind of implications. So just clarify this thing. Time of collection and exemption under TCS. TCS again, like I am the supplier. Flipkart is a e-commerce operator, and A is a buyer. So what I will do, I will place my product on the e-commerce portal, that is Flipkart. A will come on the Flipkart portal, A will place the order, and I will supply that product to A through e-commerce operator, through Flipkart. Flipkart, what will do Flipkart? In this channel, Flipkart will raise an invoice, will deliver that packet, will deliver that product to the A. A will make the payment to Flipkart, and Flipkart again just going to make the payment to me. So in this channel, just try to understand, e-commerce operator is going to collect the payment directly from the customer, and I will collect it from the Flipkart. In this transaction, while making the payment to me, Flipkart will collect the prescribed percentage of TCS from my consideration. For example, let's say it's a rate of 0.05% CGST. If it is an interest rate transaction, 0.5% of SGST. So in that scenario, Flipkart, while for example, product was for 100 rupees, 18 rupees tax was there, 118 rupees. So Flipkart is supposed to make me the payment of 118 rupees. So what he will do, what Flipkart will do, 0.5 CGST and SGST. Now Flipkart will make payment of 170. 1 rupee Flipkart will deduct, retain with him, and after that, after retaining, it will deposit to the government exchequer, file their return in the prescribed format. That amount will get reflected in my portal. What I am supposed to do, I have to accept that transaction, whether that transaction pertains to me or not. I have to check it. If it pertains to me, I will accept it. The amount will reflect into my account. So that's the procedure. I'm just briefing. See, there are a number of slides, but I'm summarizing the entire aspects, because if you can relate to the aspect, the basic concept of the TCS or TDS, then I think wherever you read the topic of TCS, whenever you come across to any of the transaction having the implication of TDS or TCS, you can correlate, you can easily identify whether a particular transaction subject to deduction of TCS or collection of deduction of TDS or collection of TCS. Because every slide there are a number of things, but I am summarizing so that you can understand it in a simplest manner. So time of collection, like in TDS, I said, if I'm making payment or if I'm crediting in my books of account. In case of TCS, the concept is at the time of transaction. Like for example, I have placed in on my portal, buyer placed an order on 30th of October and making the payment after some time. Although it doesn't happen, it happens only in case of COD. Like material is delivered on 30th of October, and if it is delivered on 5th of November, then payment will be collected on 5th of November. But in case of online payment, they get the payment immediately. In case of TDS, I said payment or credit. In this case, transaction is important. The date of transaction is relevant. Transaction is taking place, or order is placed on 30th of October, and e-commerce platform, e-commerce operator is taking the order on 30th of October. It means on that particular transaction, it has to collect TCS amount and will have to show it in the return for the period of October only, not when the payment is being collected by the e-commerce operator. So important here is, unlike the TDS provision, the important thing is transaction date, transaction when it is taking place. So you have to take care of this. So again, similarly, like TDS provision, there are certain exemptions where there is no, since there is a trail being created by the government on the taxable supplies, means so that there will be no evasion tax. So again, similar provisions are there. If the TCS will not be collected if that supply is not made through e-commerce platform. Like for example, I took an example, like I have a shop, I have some products and I've created my portal. Now I'm selling it through my portal. So it's not an e-commerce operator. It's not an e-commerce platform. It is just a displaying my product over the website. So I cannot say it's a e-commerce platform, e-commerce operator supposed to subject to the collection of TCS. Similarly, when supply is covered in section 9(5) of the CGST Act. So there are certain transactions which are being done through the e-commerce platform. For example, Ola. Ola is providing a platform. It's an e-commerce operator. It's typical e-commerce operator. But there are certain specified services which is being rendered through e-commerce platform, wherein the responsibility to pay the tax lies on the e-commerce platform itself. Like in other cases, if I am supplying through Flipkart, then the ultimate liability, ultimate responsibility to pay the tax on that supply lies on me, the ultimate supplier, not the e-commerce platform. So just to maintain the trail, e-commerce operator will collect TCS out of my tax component. But in case the tax is supposed to be deposited by the e-commerce operator, then there is no need of trail. Are you getting my point? There is no need of trail because the entire tax is already deposited by the e-commerce platform or e-commerce operator. So that's why there is no requirement. Like in case of Ola, if I am a owner of a cab and I have attached with the Ola, I am getting the customers from Ola platform. I am just providing service to the customer. My payment is being collected by the Ola platform. Ola will pay me the value for the service, not the tax component, because the tax will be charged and collected by the Ola and will be deposited directly to the government exchequer. So while making the payment to me by the Ola is not supposed to collect TCS from me, because again, if Ola is collecting TCS and I am not supposed to pay tax liability, then how I will get the credit of that particular TCS component? So that's why the supply covered under section 9(5) are not supposed to be covered under this provision of TCS. Supplies are exempted or nil rated or GST. Again, I said the trail is to be created for the taxable supplies so that the tax cannot be evaded. So there is no need for the exempted supply. Like in case of TDS, there is no need to create a trail for exempted supplies or nil rated supplies. Or exempted supplies means which are covered under notification number 2/2017 for goods, 12/2017 for services, nil rated where there is no GST, non-GST like diesel and petrol. So these kind of supplies are there where there is no requirement of creating a trail. So there is no implication of TCS provisions, although if they are being traded through an e-commerce operator. When transactions covered Schedule 3, again, if there is no Schedule 3 specifies activities which are neither supply of goods nor services, again, there is neither supply of goods or service, there is no requirement of creating such kind of things. So just summarizing, TCS is to create a trail of transaction where the suppliers are no trading through the e-commerce platform, and on e-commerce platform there are petty suppliers who are not supposed to take registration, even they are not reaching the threshold limit of 40 lakhs or 20 lakhs rupees. So there are such kind of suppliers, although in actual they are doing transaction on various platforms. For example, 10 lakh Flipkart, 10 lakh Amazon, 10 lakh or 20 lakh Meesho, or 10 lakh 50 lakh. So in that case, if they are doing it from different platforms, they cannot be you know uh, uh, they cannot be traced by the government, because they are doing from different platforms. So there is no trail. So just to get this trail, if I'm doing business from multiple platforms, so the entire business of mine will be captured by the government by bringing this provision of TCS. So just to try to understand the basic concept of TCS provision. So this is the idea, just bringing all these provisions. Rest of the things are similar, just filing of returns, making payment, just giving the credits. But theme, if you are aware about the theme, if the theme is clear to you, I can say that no transaction can be skipped by you while checking the books of accounts of a particular client or something. So just moving ahead, I've discussed about the exemptions, TCS registration, collection and payment. Again, I said TCS registration. Every e-commerce operator, again, for example, Flipkart kind of operators are supposed to take mandatory registration, because if they are not taking registration, then again the purpose of bringing the provisions of TCS will be defeated, because the person who is creating a trail is absent. Then how the trail can be created? So that's why just to create that trail, what they have done, they have made it mandatory to just all the e-commerce operator just to take the mandatory registration. But that point to be noted, like, if that platform is being used for the exempted supplies only, then in that case, is there a need for creating the trail? No. So that's why if a particular e-commerce operator who is supposed to collect TCS under provision of section of 52, in that case, he has to take mandatory registration. So that's a requirement of registration for a e-commerce operator. Again, similar like TDS, I said, if I'm a regular taxpayer like Flipkart, I'm taking example Flipkart. Flipkart is also working on inventory module. There are two different models, market model and inventory model. Market model, where somebody comes from the market and place their product on the portal of Flipkart. So that is called market model, where TDS provisions are applicable, TCS provisions are applicable. Flipkart also working on an inventory model, where Flipkart purchase on its own and keep it in their warehouse and selling it, placing it on the portal of Flipkart and selling it to the customer. So in that case, Flipkart is supposed to take a regular registration, like as a regular taxpayer. Even in that scenario, now Flipkart has to take two registration, as a regular taxpayer for inventory model, and for market model, it has to take the registration of TCS. So again, two registration. It has to take two registration. Again, I said TDS needs to be collected at the time of transaction. At the time of, again, I'm saying at the time of transaction, irrespective of the fact whether the payment is received or not. Forget about the payment. Transaction took place, transaction is taking place on the portal. It means you have to collect TCS on that and you have to show it in the return. How much TCS? Again, if it is an intra-state, means the supplier is located in the same state where the e-commerce operator is there, it has to deduct 0.5% CGST and 0.5% SGST. And if it's a supplier located in different state, it has to collect TCS of 1%. Now, an important point, collection on which value? For example, there are number of transactions that take place on the portal. For example, you have seen the practical world, like if you're ordering something from the on 25th of November, it was delivered by 28th of November. You opened the packet, you said it is not up to the mark, you are returning it to the e-commerce operator. Then what will happen? So e-commerce operator at the time of original transaction collecting TCS, and if it is paying to the government, then what will happen if it has to take it return from the customer? So for that, it has been clarified that on net value of taxable supplies, means it has to adjust the value of goods which is returned, value of services which is returned by the customer. So net value of supplies, I have mentioned TCS shall be collected at the rate of 0.5% CGST, 0.5% of SGST, or 1% of IGST, as the case may be, on the net value of supplies. Net values means you have to work out, you have to deduct the amount for the goods returned by the customers. You have to adjust that amount. Whatever the balance is there, you have to apply, you have to calculate on that amount, and you have to deposit accordingly. Again, payment, when I have to make payment, if I have already collected, then I have to make payment to the government extra so that the actual supplier can take the benefit of that TCS amount. So 10th of the following, again, similarly in case of TDS, here also the TCS shall be deposited to the government exchequer by 10th of the following. So that's the provision of TCS, registration, collection, and payment. I'm just again, I'm just repeating the entire provision. Registration, mandatory registration for the e-commerce operator if it has to collect TCS, means taxable supplies is being routed through the e-commerce portal. Simply understand this. TCS needs to be collected at time of supply, at the time of supply only, not irrespective of the fact payment when the payment is received. Once you have collected at the prescribed rate of 0.5%, 0.5% or 1%, the case may be, you have to pay to the government exchange by 10th of the following month, in which the TCS is collected from the value of the consideration of the supplier. TCS returns and credit. Again, like in case of TDS, there was a form GSTR 7, which a person deducting TCS has to file. Similarly, in case of TCS, just to pass on the benefit of the tax deducted or tax collected, there is a return in case of TCS GSTR 8, which as TCS registered person has to file by 10th of the following. Means he has to pay the tax and as well as has to file the return by 10th of the following month. For example, 30th of the transaction took place on 30th of October. That in that case, he has to file its return by 10th of November by depositing the tax. Again, without depositing the tax, he cannot file the return. So both the things have to do it simultaneously, like depositing the tax and filing the return of TCS. TCS credit, again like TDS, I told you about the TDS. Similarly, TCS. In case of TCS also, the moment e-commerce operator is filing its return in the form GSTR 8, the same will reflect on the portal of the supplier. Now, supplier has to check all the transaction. Whatever the transaction is being made by the supplier through e-commerce portal, he has to check it. If he finds it okay, then he can accept the transaction that I have done this transaction. He will accept the transaction. The amount of TCS deposited by the e-commerce operator will get automatically credited in the cash ledger of the supplier. From there, supplier, by paying his liability, he can adjust that particular amount instead of paying it in cash. Additionally, so what I mentioned, like supplier has to do this due diligence, because there could be number of transactions which a supplier has to check. Sometimes it happens like e-commerce operator is doing mistakes while filing the return and mentioning the different GST numbers. At that point of time, you cannot accept the supplies which you have never done. So because in that scenario, the liability, you will get the benefit of credit of 1%, but the liability of 17% you have to pay again. So that's a due diligence we have to do. A supplier has to do at its own, own side. So coming to the next, TCS can be utilized by. See, again, I have already told you, like TCS can be utilized by the supplier for paying his own liability. Now coming to some clarification, I think it's just for the knowledge purpose. If somebody is dealing with the particular dealing in particular case, like seller being routed through the T Board of India, they have created a platform from where no auctions is being taken uh, for the tea area, like in Assam or in Kerala. So from there, people are coming selling their tea over there. So in that scenario, tea wood is collecting some brokerage amount, or suppliers are getting are selling their products over there on that particular platform. So again, so it is clarified by the government that yes, Tea Board of India is acting as a e-commerce operator, and it has to comply with all the provisions of TCS, and has to collect TCS on the all the supplies being made through that particular portal. So that's a clarification. It's an important clarification. If somebody is dealing with these particular clients, then they can use this particular clarification. Mismatch concept. Again, I've already summarized this particular mismatch concept. So again, I'm just putting it here. Like GST rate is being filed the e-commerce operator. The say all the details filed by the e-commerce will reflect on the portal of the supplier, actual supplier. So supplier has to communicate if there is any discrepancy, or if supplier is uploading the details on through its GST, then e-commerce operator can check it. So both way they can check it. If there is any discrepancy, they have to intimate to each other whether there is some discrepancy. So after communicating the discrepancy, they have to make it rectified. If it is not rectified, it will definitely will come in the form of the liability, be it the supplier or be it the e-commerce operator. So just to there is no loss of the supplier by way of paying excess tax. In that scenario, the mismatch concept is there. You have to check it at your own due diligence. If there is discrepancy, then pay the liability which is short paid by the supplier. So after doing all this, mismatch concept is basically similar. You can see in all other GSTR 1, GSTR 2A, similar concept is over here. So again, you have to reconcile it. You have to check it. If there is a discrepancy, if it is short paid by the supplier, he has to pay the rest of the liability. If it is not shown by the e-commerce operator, you just inform the e-commerce operator, just revise or return, and e-commerce will revise its return, and the same will reflect in the portal of the supplier. TCS consequence, again, TCS consequence, you can say similarly like TDS. If the e-commerce operator is not collecting the TCS, then again he has to pay it with along with the interest at the rate of 18% and the penalty of 10,000 rupees there. If it is not not filing its return on time or not paying tax on time, again 100 rupees per day is there, which is recently introduced in 22. So again, it's a heavy penalty that somebody has to pay if there is a non-compliance done by the e-commerce operator. So that's all. I think that's all I have summarized. Tried to summarize it, the best possible manner. Hope you could understand all the aspects which I have told you. So if there is any query, if you want to ask any query, you can raise your query. I can take up right now.